Today's top stories at NBR. Fischl Healthcare beats analyst expectations. Serious line of questioning before Parliament's Finance and Expenditure Committee. An increase in revenue and profitability for Trade Me. And there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Thursday, November 25th. I'm Paul Brennan. Thanks again for joining us. Judith Collins might have thought demoting former National Party leader Simon Bridges Wednesday night would shore up her teetering leadership. Instead, it led to a vote of no confidence in her leadership at a special caucus meeting this morning, Thursday morning, and Bridges is now a contender to replace her. In the meantime, Shane Reti is acting leader until Nationals caucus meets again next Tuesday to elect Nationals' new leader. There is no guarantee either that next Tuesday's vote will finally end the disunity and division that has undermined the party over the past few years. Fischl Healthcare's 2% decline in net profit after tax beat analyst expectations today, Thursday, on the back of higher than expected sales and lower freight cost impact, as Jarden and Forsyth Barr both predicted steeper drops. The NZX-listed healthcare company said its total operating revenue for the 6 months to the end of September was $900 million, representing a 1% decline on the prior corresponding period. Net profit after tax for the first half was $222 million, a 2% decline from the prior comparable period, or a 1% decline in constant currency. The Electricity Authority must strengthen its oversight of system operator Transpower, according to a government-commissioned investigation into power cuts that left more than 34,000 households without electricity on one of the coldest nights of the year. The report into the August 9 blackouts found there was enough discretionary load to keep the lights on, but the Transpower had inadequate visibility of the extent of that discretionary load. Energy Minister Megan Woods said she would ask Transpower and the Electricity Authority to consider the 18 recommendations in the report and provide her with quarterly updates on progress. There were smiles on everyone's faces, but the line of questioning was serious when Reserve Bank leaders appeared this morning before Parliament's Finance and Expenditure Committee to discuss the bank's latest monetary policy statement. Addressing Governor Adrian Orr following Kiwi Rail's recent management upheavals and the third-party exit interview process it instigated in response, Nationals Kaikoura MP Stuart Smith referred to the retirement of Deputy Governor Jeff Biscand, who will leave in January, and the resignation of 2 other senior staff. Stuart Smith asked Orr if exit interviews are being done and what are they telling him. Adrian Orr replied, "We were well versed in attracting and retaining very, very high-quality talent and staff." Auckland-based listed high-tech manufacturer Raycon appears to be reaching out in earnest to the investment community on the back of a string of consecutive positive financial results, with Forsyth Barr analysts on the company's investor call this morning, Thursday. The move suggests Raycon has concurred with sentiment expressed by its small shareholders and analysis that has urged the company to purchase issuer-sponsored analyst research, raising its profile and potentially its value and attracting more institutional investors onto its share registry. Chief Executive Brent Robertson confirmed to NBR the company had been talking to Forsyth Barr. He said, however, there had been engagement between the companies for a while and played down Thursday's analyst questions as being a step change for Raycon. Dual-listed cancer diagnostics firm Pacific Edge Health has almost doubled its US sales team from 16 reps in April to 30 by the end of this month, following a $103.5 million capital raise to accelerate its growth in the lucrative US market. Half-year revenue lifted 66% to $6.7 million, which compares with full-year revenue of $10.4 million for the year ending March 2021. This made for a net loss of $9 million for the first half. Auckland-based ASX-listed soft tissue regeneration company Aurora Biosurgery grew first-half product revenue by 110% as it invests in the American surgical market. The company, which joined the Australian exchange in July last year, grew its product revenue by 96% to $17 million. Managing Director and Chief Executive Brian Ward said the company entered this financial year with momentum following a number of strategic shifts aimed to elevate growth. The owner of online marketplace TradeMe has posted results showing an increase in revenue and profitability after last year writing $25.8 million off the value of its website because of the COVID-19 pandemic. In financial statements filed to the company's office, holding company Titan Parent New Zealand reported earnings before interest and tax of $107 million for the year to June, up from $59.3 million a year earlier. Net revenue rose 14% to $279.2 million. The bottom line was a net profit of $4.3 million, up from a loss of $59.6 million last year. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in his Hunter's Corner column, Tim Hunter says house price inflation is inflation, so let's treat it that way, while in her weekly column, Rachel Smalley bravely stands up for New Zealand media. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place again tomorrow from 5:30 and through the weekend for another NBR This Week.